Affordable housing segment has shown a healthy progress of 28% quarter-to-quarter growth. In personal loans, our focus for the year will be Tier 1 and Tier 2 cities, where Ujjivan's presence is strong, and our target will be blue-collar salaried workers having 20 to 50,000 salary income, as these segments are highly underpenetrated. Our main differentiator is that we have merged the process of fintech and banks to a hybrid model where we are able to use the best in technology and keep the robust risk framework of banks. Secondly, our process is less of physical and more digital, which largely eliminates paperwork that a customer has to do in other banks to avail loans. Two-wheeler loans is currently cross-sold only to family members of our existing microfinance clients who have good repayment track record. Our overall asset business has been moving in the right direction, and we are all set to achieve 30 to 35% growth in this fiscal year. We had deferred rollout of banking outlets last year in order to manage our costs in view of the unforeseen large credit costs due to demonetization. We plan to accelerate the establishment of banking outlets this year. This is on track. We established 180 in the first 2 quarters and doubled our footprint. Ujjivan now has 367 banking outlets and 95 asset centers. We expect the total number of banking outlets to reach 475 by end of March 2019, out of which 120 will be in the unbanked rural sectors. The balance 48 asset center branches will be converted in the next financial year. We continue to improve our retail deposit business driven by expansion of our banking outlets, new product introduction, and our continuous marketing efforts. All our banking outlets have shown an impressive traction in retail deposits, and our retail deposit growth has been 68% Q-on-Q. Retail deposits stands at 31%, and CASA ratio is at 9%. We have onboarded 8 lakh microbanking customers and disbursed loans to their savings accounts. This has helped us significantly to build savings account balances. We also have added 2 lakh new retail deposit customers and have a very attractive senior citizen program. We introduced new current account products specifically targeting small businesses. We opened a second phone banking center based in Pune. We offer mobile banking in 5 languages to popularize usage among regional language-speaking customers. This year, we aim to convert close to 15 lakh of microbanking borrowers as banking customers and add 3 lakh retail deposit customers. We plan to cover 75% of our assets by deposits, of which retail should be 30%. We are in constructive discussion with RBI. We were in constructive discussion with RBI for the last couple of months on the issue of listing the bank and dilution of promoter shareholding through reverse merger. However, based on the recent RBI decision, we have formed board committees to carefully evaluate all other options. This will be done keeping in mind the interests of the existing shareholders, tax implications, and compliance with all the regulatory authorities to achieve the RBI's mandate to list the bank by January 2020 and dilute the promoter shareholding to 40% by January 2022. We expect to finalize by January 2019, which will leave us sufficient time to execute the steps to be undertaken. The recent Supreme Court decision on Aadhaar will not impact bulk of our microfinance customers as they all are tied up with the DBT transfer. However, for our new retail customers, we need to modify our customer acquisition process as we will not be able to authenticate through KYC. We will, however, endeavor to keep the process largely paperless using the technology we already have in place. Finally, as you are aware, I will retire in November 2019. The board engaged one of the top talent search firms. Both internal and external candidates have been reviewed. We are in the final stages of shortlisting 3 strong candidates for RBI's consideration from both internal and external sources. We expect the board to finalize the candidates by January, after which we will apply to RBI for approval. We are committed to a smooth transition where the new incumbent will have at least 6 months overlap. The fundamentals of our business are strong, and we look forward to a robust growth in the second half of the financial year of our loan book, deposits, and customer acquisition. With this, I would like to hand over to Ikira Davis to take you through further details on the financials of Ujjivan. Thank you.
Thank you, Samarth. You have seen the numbers this evening, and you can be rest assured that we are in the right way, moving on the right path with a net profit reaching 44.3 crores against a loss of 12 crores last year. And the net interest margin for the bank is 11%, which is an improvement over the last quarter, and 12% for the consolidated entity, all confirming that we are in the right direction. I'd like to take this opportunity to look at two important aspects, and I think this is the right forum to discuss it. One is the issue of NBFC. Now, as analysts, I guess you can inform the markets about what NBFCs are. And we are an NBFC holding company with just a bank as the operating company. So I think there is a lot of confusion in the market about what NBFCs are and who are the NBFCs affected. So I think this is important to understand that Ujjivan, the holding company, is a CIC, a single holding company, holding only the bank as an operating company, and to that extent is insulated from anything to do with the current market and is able to operate as a scheduled bank. The bank is a scheduled bank as against a non-scheduled, so please keep that in mind as well. And this is very important when you see your recommendations and other things into the market to understand how we are structured. So I just thought I'd mention this in this forum because this is a very important issue in the current circumstances. The other question which I'm going to address, which I think all of you have already noted and some of the questions will come along later, is our cost-income ratio. It is at 74%, and we are moving in the right direction. We believe in investing right now and building the base for a great growth as we move forward. So that is the philosophy which we have followed. Now, some of you may agree with that, some of you may not, but that is something that we as a management team have taken on, and we believe that that is the right direction. So just wanted to inform you that these are the two important things which we need to keep in mind, and obviously there will be question and answers on this. We'll take that as we go forward. I'd like to stop here, thank Axis Capital for hosting this interaction, and now I'll hand over to the moderator for question and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking our question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Digant Haria from Antique Stock Broking. Please go ahead.
Hi. My first question is that, in this quarter, did we have any one-off income from, say, securitization or the PSLCs?
Hello.
Hello.
During this quarter, as far as one-off incomes are concerned, PSLC we have earned 1 crore and no securitization income.
Okay. All right.
Last quarter, first quarter, we had 24 crores of PSLC income, but this quarter only 1 crore of PSLC income and no securitization income. Even last quarter also, there was no securitization income. So this quarter is primarily our operating profit, if you see, if you compare it from the Q1 profit numbers.
Okay. Thanks for that. My second question is, in the microfinance business, we have increased the lending rates from somewhere in September, right? So what would be our current lending rate in the microfinance book?
22%.
22%. Okay. And lastly, my last question is that, what has led to, between Q1 and Q2, we have significantly increased our guidance for, the microfinance piece that, we were earlier talking of something like 20-25% overall growth. Now we are talking about 30-35%. So what has changed in, Ghosh's remarks that there are three things which has been changed and which is why you're expecting. But what is the fundamental change on ground? Like, is there anything on ground that you saw improving, or it was more Ujjivan specific things which Ghosh sir mentioned that will be responsible for the higher growth?
So we have maintained our guidance actually for overall growth as well as microfinance. What we are saying is our overall growth will be 30-35% and microfinance growth will continue to be 20%, closer to 20%. So there is no change.
Okay. And then we also continue with this that overall, non-microfinance will contribute to 20% of the overall loan book by the year end?
Yes.
Okay. Thanks. That's it from my side. Thank you and all the best.
Thank you, sir. We have a next question from the line of Rohan Mandora from Equirus Securities. Please go ahead.
Sir, thanks for the opportunity. I'm referring to slide 24 of the presentation, where you have given details about the type of loans and disbursement. So in this, 25% is the loans disbursed in the fresh segment and 75% repeat. And last year this ratio was 44 and 56. So just trying to understand, as we are rolling out newer products as well as adding new liability branches, so should this share of fresh customers be higher than 44? Or is it that mostly the disbursement that we are doing is towards as cross-sell to the existing MFI customers? So just wanted to get some color on this.
Yeah, sure. So Q2 FY18 number where you see a breakup between fresh and repeat of 44 and 56%. I mean, it was one of the distressed time and our disbursements were limited and we were limited in our disbursement and only giving loans to good customers, selected good customers, and that is why that number is kind of one-time number. Our regular repeat versus fresh composition is close to 25 to 30% fresh and remaining repeat. And we are maintaining more or less similar trends even in this quarter.
But should this the share of fresh increase going ahead, or say next 2 years down the line? Should it go further to 35-40%, or will it remain at similar levels? Just trying to understand that, will we focus more on cross-sell to the existing MFI customers, or will we look to tap newer segment of customers?
So as we progress, as we add on new product, and this number should improve as we progress. It should go up. With housing, MSE, and personal loan, two-wheeler loan contributing, it should increase.
And the set of repeat customers, does it also include the customers whom we would have given loans earlier, but they are not live customers right now? The base of that would increase that.
Yeah.
Okay. Sure. And sir, if you would give the split between the other income, 1 crore was PSLC, but other than that, like how much was the interest income on investment, how much was the core liability fees, and how much was the loan processing fees?
Okay. You are asking about the breakup of other income, right?
Yes.
Okay.
Other income, when we look into the breakup of other income, we have PSLC income, which is total 25 crores. We have income from the fee income from the third-party products, 5 crores. Income from the write-off assets recovery, that is 5 crores. Interest on our fixed deposits, 1 crore. And our miscellaneous income, 6 crores. Total amounting to 42 crores.
Miscellaneous? Ma'am, PSLC you said 25, it would be 1 crore, I believe.
Sorry, that was YTD number. That was first half.
If you could also give for the 2Q number?
Yeah, I'll give you the 2Q number. Treasury operations is 25 crores. Bad debt recovery is 3 crores. Fee income is 4 crores. And miscellaneous income is 6 crores. That's the breakup of 38 crores.
Sure, thanks. And with respect to the increase that we have taken on the MFI book, only the incremental book would get repriced higher is what I believe. So, like in the next quarter, like how do we expect the NIM trajectory to behave in the second half of the year? What is your guidance on that?
Coming down in a matter of 3 to 4 years. We have now reached almost 77.4, and we are talking about a further 4 years to bring it down to 55. Can you kind of give us some color on why this delay and what can be the best case scenario?
So our initial guidance was 3 to 4 years, and I think we might miss that by a year or so because of the demonetization and related loss of growth and loss of income. So there is not significant change, but our target has shifted by a year or so.
Right. This is probably one of the main reasons why our ROE probably is still in single digits now. Closer to the time when you get your 55% kind of target, where do we think our ROA can be and where can ROE be?
So, during that time, I think steady state it will be 2.5% of ROA and close to 17-18% of ROE.
Right. My second question is on income from third-party products. Now that our branch rollout is actually gaining momentum, what is your vision in terms of where it can get to?
Currently, where we stand on the third-party products, we are progressing pretty well. Our growth rates are good. We have launched a whole bunch of new products and new tie-ups by which our third-party products are growing well. And our expectation is that we will, in about 3 to 4 years' time, we should be hitting a number which is at least about 6 to 7 times of where we stand at the moment.
Right. My last question, sir, is about our branch rollout. We initially wanted to be only in unbanked areas. What has been our experience with respect to liability products during our rollout process, and where do you think there is scope for improvement?
Okay, so on the branch rollout, unbanked centers that you talked about is part of our mandate. So 25% of our branches have to be in unbanked rural centers. And most of the others that we've done are really conversion of our asset centers and moved into, high-speed branches in all of those places. Liability products in each of these places has done, and so we've categorized the branches based on our expectation of what the market opportunity is and market competitiveness is in the different segments of market. And in each of these markets, we are seeing really good traction on the liability products. And that's a combination of open market customers as well as customers who are from the microbanking segment. And, the open market customers obviously have much higher deposit basis versus that of the microbanking, which is as per expectation. Yeah, and in the rural banking segment also, we are seeing good traction because, we are the only game in town when we set up branches and run bank centers. And we have the entire gamut of affluent rural to the mass market rural banking with us there.
Do we get reasonable deposits even from non-customers, even to customers to whom we don't lend to?
Oh, yes, absolutely. And that's our strategy. That's our branch banking strategy, is to go to open market customers and reach out to them.
Broadly, what would be a ratio from that segment out of our total deposits?
In terms of number of customers or in terms of value?
Value.
In terms of value, if you look at the per customer deposits, we are close to about a little over 8,000 in terms of average deposit numbers. In the case of microbanking, that will be more around 3,000.
No, I meant out of our total deposits, what would be total non-lenders and in terms of absolute value, we have about 3,000 crores of customer deposits, right?
So would be close to about our open market customers would be about 60% and 40% would be microbanking.
Very interesting. That's all from my side. I'll stand in the queue. Thanks a lot.
Thank you very much, sir. We have next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir. So, I just basically wanted to understand something on the absolute cost level. Like currently we are at 232 crores OPEX that we've done this quarter. We are planning to take the branches to 475. And so what's the kind of a absolute cost trajectory that we are looking at maybe in coming 2-3 quarters, or what's the kind of a level at which you will reach, and from there it will kind of will kind of stabilize. So some sense on those lines will be helpful.
As we are now, this year we are onto the expansion mode and we are opening up our branches. In the Q3 and Q4, we are expected to convert as well as newly open again 108 branches. So we are expecting the year we are closing the year with close to 74% of cost to income ratio.
Come again?
On absolute numbers, we have 232 crores in the Q2. We are expecting close to 261 in Q3 and 269 crores in Q4.
Okay. And when do you see the inflection point basically? Like from currently we are the expansion mode. So is that is what we are envisaging for the next year as well, or next year will be the kind of improvement year for cost income ratio?
So from next year onwards, we will see improvement in our cost to income ratio.
Okay. So have you shared some guidance on next year cost to income ratio as well? Like you have given guidance for 4 years.
No, so actually we have not shared any guidance for next financial year. But I can tell you directionally, because most of the conversion is over and one-time costs related to technology, setting up infrastructure, and one-time people-related costs are incurred in last 18 to 24 months, we don't expect that kind of cost to come in. So in next 3 years, we will see our cost-to-income ratio going down to 55%. And next year will be an important year to reduce this number significantly lower.
Oh, so next year itself we are looking at maybe 74-75% is what we are looking at FY19. So next year is what we might look to reduce this figure significantly, right?
Yes.
Okay, sure. That's it from my side. Thank you very much. All the way best.
Thank you, sir. We have next question from the line of Sunil Kothari from Unique Investment. Please go ahead.
Thanks for the opportunity. Sir, my question is related to little, I mean, historical, this, when we done IPO, Mr. Ghosh can, I think, do some clarification on this. The initial our cost to income ratio was around 40-45, and then we're talking about when we reach this branch expansion to roughly 65, and then coming back to around 50-55. So is there any structural change? That is what I wanted to understand, or is it just passing some phase which has increased this much 77-78% the cost to income ratio?
So I mean, such a high cost to income ratio is mainly because of the one-time infrastructure cost. For example, all the branches which we are kind of redoing, we are converting our microfinance branches into bank branch. So their one-time cost is getting into cost to income ratio. Our recurring cost of running a branch is significantly higher. Rental, etc. for a bank branch is significantly higher. So that is also getting into our cost to income ratio. And income will take a while to kind of reach to that trajectory. Cost is kind of slightly moving faster in this financial year and previous financial year. Next year onwards, we see a significant income stream to also follow, because these banks will sell multiple products on the asset side as well as third-party products. So that will help us bring down our cost to income ratio. So it's largely one-time investment, lot of technology investment, which is, and addition of people. We are adding a lot of people to support our banking operation. So those things are going into our higher cost to income number.
But you don't see any threat to your objective or target within the next 3 years? You want to reach this 55%, or you feel there is some possibilities of some higher cost?
No, so I think we are very confident that we can meet that 55% cost to income ratio. I mean, and this confidence partly comes from our very healthy NIM and the way our NIMs are moving, and we have flexibility to kind of maintain slightly better NIM compared to regular banks. And also our third-party income are expected to increase as we progress.
No, the other thing is this 2 years, in these 2 years, we've made very heavy investment in technology in terms of people and in terms of the physical infrastructure of branches, etc. We also had deferred a lot of these expenditures to the second year, because in the first year, because we had to take the demonetization cost, so that cost has been pushed to the second year. So what we are currently seeing is, fairly high cost to income ratio. But these investments will start yielding higher levels of business, in terms of top line and also bottom line. And you will see that from the second half of this year, specifically in terms of growth of our top line. And by next year, you will see the full impact of the revenue and income generation from all these investments we have made. So that is what makes us confident in terms of lowering the cost to income ratio.
Right, sir. Great. And sir, last question is, just as a layman, I wanted to understand is how much better rate on FDs we offer to, say, retail customer who comes to you and not gone to, say, HDFC Bank or SBI. What type of attraction they have to come to you to put a deposit?
Well, there are two reasons. One, we offer better rates than anybody else does, and we've done that through, through a 1 year rate and through a longer term, odd day rate kind of a promotion. Second thing is also we provide great service. We have facilities by which we reach the doorstep of the customer. And, that is something that is particularly liked by customers who are senior. And we advertise through radio, we advertise through newsprint, we advertise through digital medium by which people come in. Also, the fact that whenever a person opens a bank account, it is instantaneous. We've done it digitally, we've managed to do it digitally, and that's seen as a big attraction for our customers.
Okay. Thank you very much, sir. Thanks a lot.
Thank you, sir. We have a next question from the line of MB Mahesh from Kotak Securities. Please go ahead.
Good afternoon to all. Just a few questions from my side. A question again on the cost-to-income ratio. You indicated that the second half costs to be somewhere in the range of about 260-odd crores. And given the fact that you seem to have given a guidance of about 75% in terms of cost-to-income ratio for this year, just trying to understand, are you expecting significant traction in terms of your revenue profile? Because for the last 3 quarters, your revenues has been kind of flattish at about 300-odd crores. Just trying to understand where is the confidence on the top line coming through. Second, a question to Rajat. There's been some discussion on the MFIN table from whatever we've been hearing from a few MFIs that they could look to increase the average ticket size again from 80,000 rupees to close to about 100,000 rupees. Just wanted your views on that. And also, are you seeing significant increase in the average ticket size in West Bengal? If time permits, a question on the CASA profile. Just wanted to understand the median deposits that you're getting, what is the average ticket size, and the refinancing that you're doing, at what ticket size that you're doing out there. Thanks.
Okay. So we'll start with the first question. I mean, in Q3 and Q4, we expect significant improvement in our income profile, and that is mainly because our disbursement has started moving upwards from September onwards, and we have given that numbers in our presentation, September, October, and we see similar uptake and even higher in coming months. So that will help us maintain this cost-to-income ratio which we have quoted, even with our higher cost. And it will be purely our operating profit. There is very less one-time income which we are kind of baking into our cost-to-income ratio. So we are confident on the basis our disbursement trend now. Second question on the increasing the exposure limit. So, I mean, many of the SFBs have already kind of taken a path, and in some of the select location and branches, they have increased their exposure to 100,000. Even we have taken that path, especially in good areas and area which has where income profile of customers are better and there is no issue on the ground. We have increased that to 100,000. And I mean, I think as long as they are repeat customers, they are known to us, we have their track record, we are also giving them a slightly better exposure. In West Bengal, we are seeing some of the competitors have increased their ticket size significantly. We are serving our repeat customers, keeping overall exposure limit in mind, and which means at some point, sometimes we also lose some of our existing repeat customers, but we are not going beyond 100,000 in those areas at this moment. And third question, I'll ask Sanjay to talk about. Could you please...
the question is on the CASA front. Just trying to understand, what is the median deposits or the ticket size that you are getting today? And also, how much of your asset side customers have moved to a liability side customer, and how aggressive are you pushing that? And what is the refinancing rate at which you're doing today? The cost of refinancing the borrowings which is under the liability side.
Okay, so let me take that one by one. First of all, we are looking to convert almost 50% of our customers in this year to banking. Of our micro-banking customers who are borrowers, they will become customers for banking.
I think Mahesh is asking how many we have.
So we have
800. 8 lakh.
8 lakh.
8 lakh.
8 lakh.
Going to go up to 15
lakh
by the end of the year.
Yeah.
Okay,
so that's one. Second, these are balances that build up progressively, and so we have pretty healthy balances at the moment with these customers ranging to around 3,000 per customer. What is the third question, please?
So, Mahesh, actually, when we are disbursing these loans into these accounts, and we find that about 15% of the deposit, they gradually withdraw the entire amount, but 15%, on the average, 15% of the disbursed amount is in the savings account, which they gradually withdraw. And we have not yet, we also try to cross-sell fixed deposits or recurring deposits to these customers, but that's not a significant number yet, and we hopefully will start doing that much more in the next financial year. These are as far as microfinance customers are concerned.
Sure. And the duration at the cost of that which you are borrowing today on the refinancing window?
So on the refinancing, overall cost is in the range of 9.37%. That's the average cost. And 40% of our total borrowing is by way of a refinance. This is a complete loaded cost, no additional cost from that.
I'll just come back just a follow-up question to Samit or Sanjay, whoever wants to take this question. See, when we look at most bank branches in India, they seem to be, when you're looking at the mid-tier branches, they have an average deposits of close to about 60 to 70 crores. Now, at this point of time, given the fact that you just kind of started off these branches rollout, where do you think, according to you guys are thinking that it will settle based on whatever feedback that you're getting on the ground with respect to customers' acceptance as you as a bank, so that it just gives us a bit more clarity as to how you're progressing on your bank branch rollouts after you've converted everything in the next 1 year?
So, the number that we are looking at in a year's time frame, and this can vary between the kind of branches, the kind of towns that we're talking about, and particularly the town that you've spoken about, that kind of category, is at around 25 crores.
Sure. That seems to be a good number to work with. So we can just kind of extrapolate, let's say, 500 branches into 25 crores once it stabilizes at that number, you will start doing the rollouts of the next set of branches?
Well, the next set of branches that we will roll out, that's a rolling thing. I don't think we are going to, first and foremost, we want to convert all our asset centers into branches. So by the end of this year, we still have about 49 odd asset centers remaining, which we will convert into branches. And at the moment, we are working on, what the next set of branches are going to be, when they will be launched. And that's based on an extensive area survey that we are doing of, areas that we would like to get into.
Sure. Thanks a lot for this.
We would request that the participants restrict their questions to 2 each, because there are several people who want to ask questions. Let's give a chance to everybody. Thank you.
Thank you very much, sir. We have a next question from the line of Abhishek Murarka from IIFL. Please go ahead.
Hello.
Hi.
Hello. Yeah, hi, good evening to everyone. I have just one question, and it relates to credit costs. Pre-demonetization, your credit costs were about 60-70 basis points. And if I look at the first half, also on an annualized basis, it's around 50, I guess. But considering that MFI is now going to become a smaller and smaller portion of your asset book, going forward, what kind of credit costs do you think, you would budget into your overall mix and going for, into estimates, let's say in FY19 and more importantly FY2021?
Sure. As far as FY19 is concerned, we expect the credit cost to be sub 70 basis points, which is the guidance we've given earlier as well. And as far as the next financial year is concerned, as you rightly said, with the different mix and addition of new products, we expect the cost to be slightly different. And our present indication is in the range of 100 to 150 basis points.
Okay. Thanks a lot. That's what I was looking for. Thanks.
Thank you, sir. We have a next question from the line of Gautam Jain from GCJ Financial. Please go ahead.
Hello, Samir sir and the team. Congratulations for stable set of numbers.
Thank you.
Sir, can I get the RWA number? Can I get the RWA number? Risk-weighted asset number?
Risk-weighted asset.
We don't have that number handy.
We'll share it with you later.
Okay, and can I get the breakup of other income? Which is the breakup of 38 crore?
Yeah, just a moment, please.
Yes, there is why
It's 25 crore from treasury operations.
Yeah.
3 crore from bad debt recovery. 4 crore fee income. 6 crore miscellaneous.
Okay. And what was the reason behind the lower tax rate in this quarter? It comes to 29% on the PBT.
Sorry, come again?
What is the reason of lower tax rate in this quarter?
Just one moment.
So, on the lower tax, as per the union budget, in financial year FY17, our turnover was 250 crores. And on 250 crores turnover, the applicable tax rate is 25%. After considering DTA and DTF, now the effective tax rate comes at 29%, and that's how it's getting reflected in the tax part.
Okay, so you're talking about FY17, not this year, right?
No, we'll get the benefit this year. This is the turnover of FY17.
Okay. And on the current turnover...
Would you like to come back in the queue?
Okay, I'll come back. Thank you.
Thank you. Participants, kindly restrict your questions to 2 per participant. We have a next question from the line of Siddharth Malhotra, individual investor. Please go ahead.
Hi, good evening, everybody. Firstly, thanks for reminding everybody that we should keep it strictly to 2 questions, which I will be doing so respectful of the other participants on the line. So my first question is, Mr. Ghosh had, in a recent interview, he had spoken with the customers that Ujjivan will finally get is about 10 times in the next 7 years. So say from 4 million, we'll go to 40 million in the next 10 years, roughly. would it be all right to expect our profit to move 5 times in the next 5 years too? Would that be reasonable?
I think there will be significant increase in profit. Our goal is to grow our customer base 10x, and hopefully your bottom line also will follow that kind of a number.
Right, sir.
But we have built platforms. We have built the platforms already to achieve that kind of. We have invested very heavily in technology, in terms of branch network, in terms of people, and though we will continue to make investments in the future, but not to, in that scale. So our goal internally we have set is that we should go for a 10x growth in our customer base.
Right.
And that will largely will come 50% from our microfinance business, because we'll extend our facilities, banking facilities to the entire family, which we've already started. And 50% of the growth in customer base will come from new customer acquisition. And our target will be largely in the semi-urban, rural space, where, urban is a very crowded market. And our even marketing and all these efforts would be in regional languages, etc. So that's our strategy going ahead for next 7 years.
Right, sir. My second question is, sir, in, this current NBFC crisis, you did mention in your interview recently that this does offer a window of opportunity for you. It might be a little bit early, but are you seeing any market share gains coming to Ujjivan as a result of the current crisis, sir?
Yeah, obviously, it's a difficult time for a lot of microfinance institutions, especially the smaller ones. So we see a significant opportunity of growth in the microfinance business, which you will see in the second half of this year. And the other thing is we also have started a program where we lend to other microfinance institutions, because we know that segment very well, largely to the medium-sized, well-run, well-managed institutions. So that also opens up a little bit of opportunity to grow our business.
Right. Thank you very much, sir, and I wish you all the very best in your new innings post November 2019, sir.
Thank you very much.
Thank you, sir. We have a next question from the line of Sonia Lalwani from Qtr2 Investment Advisors. Please go ahead.
Good evening, sir. So could you share the active borrowers count in the quarter two?
So our active borrower base is close to 37 lakhs at the end of quarter two.
Okay. Thank you, sir.
And the total customer base is close to 40 lakhs at the end of quarter two, which is on the microfinance side. And if you put all customers together, then our total customer base is 42 lakhs.
Okay, including non-MFI.
Yeah.
Okay. So 37 lakhs include MFI and non-MFI both.
Sorry?
37 lakh customers include both MFI as well as non-MFI borrowers.
No, so that would be 42 lakhs. So let me explain to you. First of all, let us talk about microfinance. So in the microfinance, we have a customer base of close to 40 lakhs. Of that, 37 lakhs are active customers. So that's the microfinance. Then additionally, we have close to 5 lakh customers, including other assets and liability customers. So that makes the total customer base of 42 lakhs.
Okay.
Yeah.
Okay. So 5 lakh, could you share the breakup of 5 lakhs into non-MFI borrowers as well as, and customers?
We can
37 lakhs.
Listen across to you. Yeah.
Okay. Thank you, sir.
Thank you. We have next question from the line of Gaurav Jani from Centrum Broking. Please go ahead.
Yeah, hello. Am I audible? Yes. Thanks for taking my question, sir. Just a clarity on the holding company issue. So while we appreciate that, we have a timeline till January 2019, but if you can just give some color as to what are we discussing in terms of, the dilution for existing shareholders or how would the exchange ratio be and at what kind of valuation? Thanks.
So, right now our time frame actually is January 2020, and we set up a board subcommittee, two subcommittees actually, to check out the various options, in terms of listing, and that will be based on making sure we have the interest of the shareholders in mind, and also optimize our tax rate. So there are various options we are looking at, and I think we don't have, right now it's on the drawing board, and we are also, close touch with Equitas, and because their timeline is a bit more advanced. And we should have a clear picture in terms of what we want to do by January of this year. So it's too premature now to say, 20%, 60% or whatever. But we would like to accomplish both the goals. One is listing of the bank and also the dilution of our shareholding to 40%. So we are looking at various options. It is right now very premature to say what exact path we will follow. But by January, we'll have a clear line of action.
Okay, thank you. That's it from my side.
Thank you, sir. We have next question from the line of Dhaval Kara from DSP Mutual Fund. Please go ahead.
Yeah, so just one question on one data point actually. What is the number of customers added in the MFI portfolio during the quarter?
How many customers? 1.7 lakh.
Okay, fine. Thanks.
Thank you, sir. We have next question from the line of Krish Shanbag, individual investor. Please go ahead.
Yeah, sir, one of my requests is please allow a fair share for individual investors to ask questions. We remain in a queue for a long time and we are not given any time to ask any questions. So with that, I have just one or two questions. One is, do we have exposure to the IL&FS group, and if so, what is the amount?
No, we have none.
Okay, my second question is again on the shareholding. We were owning 100% shares of the business and now we own the holding company. So I request you to ensure that there is absolutely no dilution for existing shareholders. Obviously law permitting, but that is a request from shareholders who have held on to your company shares for a long time.
Right. I mean, we are exploring all the options, but we have to comply with the RBI regulation in terms of listing the bank. And so, as I told you, by January, we will have a clear line. But one thing I can assure you that we will ensure that your interest is taken care of. But on the other hand, we really need to meet the RBI guidelines, We, as you know, for last 2 months, we were discussing with RBI in a very constructive solutions. But RBI came back and told us that we just have to meet the licensing guidelines. So we are sort of back in the drawing board and trying to figure out what is the best solution for the bank and for our investors.
Yeah, so, sir, please take this as a request from existing shareholders. When you communicate with RBI, this will completely kill minority shareholding if this happens. Because, if we don't, the entire business was owned by us.
Right.
So, there is no point in then holding into the shares of these kind of things when, you get completely diluted for no reason of yours. So I think please take this request and in your conversations with RBI that minority shareholders have been protesting this. I mean, you can do as per rules and regulations, but the shareholding interest of minority shareholders should be upheld. That please take this request from our side.
Yes, and that is the solution we were working on earlier, and we were a bit disappointed that we have to go back to the drawing board. But we'll definitely keep that in mind and communicate that to RBI.
Yes. Thank you very much, sir.
Thank you, sir. We have a next question from the line of Manish Ostwal from Nirmal Bang. Please go ahead.
Yes, Sir, thank you for the opportunity. And the first question on this customer growth trend the last few quarters, it's very flattish kind of trend. So, despite of adding, converging into banking branches and the growing the MFI portfolio, why our customer base is not increasing, sir?
Okay, so there were two main reasons. One, our repeat conversion was lower than what we were expecting, and due to various challenges we were facing post demonetization. We have sorted out all those problems. We have opened up all the areas, and now that a lot of discipline has come back to business in terms of customers coming to center meeting, attending center meeting, our field staff has a lot of time to focus on business again, give loan to repeat customers. So our retention has started improving, and that's how our customer base now is, as we progress, will stop declining. In addition to that, we have also opened up a lot of new areas in existing branch catchment, and our new customer acquisition is also expected to go up. So on both sides we are working, and that should help us improve the customer base in third and fourth quarter.
Secondly, sir, you shared that we are currently have a MFI rate of 22%, which is among the higher end compared to player like Bharat Finance and Bandhan Bank. So, how is our competitiveness in the market to get the top end of the customers at these rates, sir?
So, customers are, our experience is customers are not really, differentiating players based on only interest rate. Ticket size, how quickly we can give them loan, service plays a larger role than interest rate. So, at this moment, we are not losing any customers because of interest rate.
One small data point, sir, what is the cost of borrowing and cost of deposit on a marginal basis, sir, during the quarter, compared to quarter one? Thank you.
I request Isma to take that.
So, during the quarter, our cost of deposits is in the range of 7.7%, and cost of borrowing is around 8.5%.
That is on marginal basis, madam?
For the quarter, that's an incurred one.
Actually, I want marginal basis, madam.
Marginal, our cost of deposits will be around 8.01%, and borrowings is around 8.8%.
Thank you.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Sir, over to you.
I'd like to thank all the participants for joining us this evening and, bringing to the attention of all concerned about the changes that have taken place, the growth in the business, and also what is the potential coming up. I'd like to thank Axis Capital for hosting this. Thank you very much, and good evening.